Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So basically, when you're looking at continuation patterns, you want to look at something where you do have these slower momentum moves, these slower counter moves. Let's say you're looking at bull flag, for example. Well, draw it down to smaller time frames and look at what the momentum is doing in those smaller time frames. If you have a shift in momentum within that bull flag, you're going to more easily get a strong breakout that can lead to larger target levels than you would if you don't have that shift in momentum. Without that shift in momentum, the highs in the flag can serve as strong resistance, and you can get false breakouts as well, where it can pull from the lower end of the trading range through the highs, serve as a trap, and then go on and lead a reversal. A little bit ago, we talked about measured moves and how that can affect target levels. Well, here's a template that shows you a little bit of how pace or momentum comes into play. And what you can see here is that when you have a move where the breakout for continuation is comparable to the move going into it, meaning that the breakout from B is comparable to the upside move in A, then a very typical target you can place is just measuring that upside move and then take that and add it to where the continuation would break out. And that will give you a target level that is often very, very strong as long as the momentum remains the same. So when the momentum remains the same, if this was like a 1-point move here, then your target level would be another point higher on the breakout. And you're looking at the low of this correction as where you would start to measure that breakout from. So if your low is over here, you'd measure it from there. If it's sloppy and you can't really tell where it goes, let's say here's like the trading range and you're not really sure which low to use, then you can take, that entire zone, transect that, use this as the start to measure, take the middle of it, and then add it to that. So you're basically taking the transecting this action here and taking that transected line and measuring that up to where the transected line meets, and then taking that transection and extending that higher. Hopefully that is a little bit clear. You might want to repeat that, though, if you go back and listen to this again on the archive. Again, this is going to be recorded, so I know a lot of you have asked that question, and you'll be able to find it at fxoptions.com/events. Now, when the momentum is slower, or you have a shift in momentum within this trading range, where it's slower on the breakout, then your chances of hitting that equal move target are greatly diminished, meaning you're going to have to be more aggressive in terms of taking your gains on that position than you would otherwise. And if the momentum is stronger than average, meaning it breaks out more sharply than going into that trading range or congestion zone, then you have an example of where you can get a target level that is higher than what you might have already anticipated. And these might not be necessarily helpful right away in determining, which options expirations you want to go for. But if you take setups where the breakout has already occurred and you're looking for continuation moves, then this can give you a very good handle on what to expect on that continuation move. Say, for example, you were able to get into this here, then you would know that you would still be able to get a stronger than equal move than if you got into something where the momentum really wasn't quite picking up yet, and you might have that higher risk. So you would want to look at what are the closer target levels or resistance levels that you might want to keep an eye on. In this example, we have this equal move level here. And I want to show you a couple of other examples of the same thing, where these will serve as very, very strong target zones. You can see this here on a 15-minute chart. This is the CDD, which is the U.S. dollar, CAD, Canadian dollar, where here's our initial drop. There's a two-wave correction, and then here's the continuation move. This allows you to go ahead, and if you're looking for a two-wave continuation, you can go ahead and have a good idea of where your target zone is going to be based upon what would be an equal move here, as well as support levels from this previous high, which would be a gap support level. So your target zone would basically be right in here, and how the momentum occurs going into that support zone is going to determine whether it pushes to the lower end of that target or it holds the upper end of that target. In this case, there was a little bit of a slower momentum move on the breakdown than there was the initial drop, so it didn't quite hit that exact equal move, although it did come extremely close and come into what would have been an upper end of that same target zone. Here's another example that shows you that it can work with gaps as well as with intraday data. So we had a move lower here on the BPX, which is the U.S. dollar British pound. There was another two-wave correction, this time on the upside, and then it gaps lower. And you can see again, here's that gap closure. A couple of types of gap closure. Some people will use the high, and some people will use price levels too. So looking at this previous example, this could have also been a gap closure level right here, and this would be a gap closure level. So it's coming into that zone, and it also has that equal move target right there as well. And you can see that by gapping lower into that, it actually was able to bounce right off of that support zone because it opened and began the session at that target level. Now, going back and looking at targets and how to establish targets on other types of moves, I know a lot of you traders will time pivot highs and pivot lows. So basically, you're looking at other types of reversal strategies than the pure momentum shift one that I talked about earlier. Well, when you have a situation that you're looking at reversals off of highs and lows, such as here, these V-bottoms, where you might see momentum shifting in those lower levels on smaller time frames. For example, you might see it shift like this at the low, but the overall momentum looks more like a V. Even when you do have this rounding type of action, the same type of setups for targets will still apply, where typically just under where you saw that V begin is going to serve as a target level. Oftentimes you can take that channel, and basically where that channel breaks, you can draw a line straight out, and that will serve as a target zone. So when I'm taking a reversal off of a low like this, right here off of the low from E, then my typical target is going to be just under where this breakdown began. So just under the high of D is going to be my target zone. And in order to hit that target, I don't want this drop here, E, to be extreme. I want it to be about average, maybe just a little bit faster than average or a little bit slower than average, but I don't want it to be extreme because the extreme moves are going to have a much more difficult time really whipping back as they would on a typical back and forth. So if this just dropped like this, it's going to have a very hard time making it back up like that if these are the average momentum moves of typical back and forth action in that security.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. These exchange-listed securities are cash settled in U.S. dollars and have a European-style exercise.